are watching India Today.
Hello and welcome to India Today. I'm Anjali Istawal. We begin this bulletin with big breaking news coming in from Maharashtra. It seems that the post-poll alliances which were made, which were quite unique and were raising eyebrows, now have been put aside by the Chief Minister Devendra Fadnavis himself. He has said that ideology is first and power is later for BJP. Remember in Akola, in district Akola, there was an alliance that was made with Asaduddin Owaisi's AIMIM, and now it seems that the Chief Minister, who was not happy with it, has told them to end that alliance, and also an alliance between Congress and BJP, saying that ideology is supreme. And joining us now is India Today's Vidya on this issue. Vidya, you know, these alliances that we saw in Maharashtra, that two post-election alliances, they were very surprising. And now it seems that the top man has put them aside. Okay, we'll try and speak to Vidya in a bit. But let's try and explain to you what really happened. We saw the local body elections being held after many years in Maharashtra. And in many municipal councils, later on, after the election, we saw alliances emerging, which people couldn't really wrap their heads around. And it seems that the Chief Minister, Devendra Fadnavis, also could not wrap his head around this alliance that was made by the BJP. BJP made an alliance with Asaduddin Owaisi's party AIMIM. BJP made an alliance with the Congress party, which is supposed to be its ideological rival. And they ended up making a local body alliance together. And that is what upset the Maharashtra Chief Minister, and he has made it clear that all these alliances do not have his permission, they do not have his blessings, and he has warned the local leaders who went ahead and made these alliances that they need to put these alliances aside. Remember, the BJP had entered into a post-poll alliance with the Congress and AIMIM in some municipal councils of Maharashtra, and these tie-ups have now been rejected by Devendra Fadnavis, and he has warned of action against the party leaders who were involved in forming these alliances. Now, the civic elections were held last month, and the BJP joined hands with Congress and the Ajit Pawar-led NCP as well under the banner of Ambarnath Vikas Aghadi. And it seems that Vidya now joins us on the phone line. Vidya, all these alliances that we had seen, BJP, AIMIM, BJP, Congress, of course, these were something that people couldn't really understand the basis of. So what is happening now? What has the Chief Minister said?
Well, the Chief Minister has, of course, come down heavily on the BJP unit, which has gone and formed this alliance and asked for it to be withdrawn immediately. And it is a similar case with the Congress as well, which claims that they did not know. The senior leaders of the Congress party did not know in the state as to whether this kind of a alliance was being formed at a very local level. Though they are saying that, you know, it was formed because of very local issues against the Eknath Shinde faction that took at Ambarnath, that they had formed the alliance with the BJP. But because it goes against the ethos that the party really stands for now, that the party has now decided to suspend those very leaders who, they have issued show cause notice and suspension letter to the block leader of Ambarnath, as well as those leaders, elected leaders who had formed this kind of coalition in Ambarnath. And that's one of the reasons why Congress too is coming down heavily on its own leaders and there. And it's a similar case with the BJP, with the Chief Minister now expressing that the local leaders who have formed this will have to break off this alliance before it gets out of hand.
Right. Thank you, Vidya, for all those details. So clearly now the party top leaders are putting an end to this uneasy alliance that we were seeing happening at local levels. And another news of another alliance, this time from Tamil Nadu. It seems NDA is becoming stronger with the PMK now joining their alliance along with AIADMK. The PMK's leader, Abumani Ramadas, has joined the NDA ahead of the polls. He met up with EPS, who is the leader of the AIADMK, and this deal is sealed. He is now part of NDA. Now, this alliance is supposed to boost the crucial one-year vote bank in the state, and it is expected that Ramadas will help consolidate any anti-DMK vote bank. He spoke exclusively to India Today's Anagha Keshav.
The reason for us joining this alliance is to remove the corrupt and inefficient DMK government in Tamil Nadu. The last 5 years in Tamil Nadu has been the worst 5 years in the history of Tamil Nadu. And we have seen corruption at the peak, no safety for women and children, rampant abuse of alcohol and substance in school children and college children everywhere. Farmers are very angry and upset with this government. Agriculture has been in the negative in the last 2 years. There's no growth, negative. And unemployment is at the peak. ADMK and PMK are a natural alliance, like in the past, like we have come together on numerous times. So this alliance is going to be a mega alliance, and some more parties we expect to join this alliance.
Right, and now let's cut across to Sakshi Batra of Business Today, who joins us with all the updates of the markets. Sakshi, it's over to you.
Good afternoon and welcome to the market closing show here on India Today. I'm Sakshi Batra. First up, let's take a look at what's hot in the corporate and the financial world. Markets in the red for the third consecutive session amid global tensions and the tariff threats. Sensex is now down 200 points near to 84,500 odd mark. The Nifty is also down by 70 odd points, hovering around 26,100. Selling pressure is seen in autos, real estate, oil and gas, while IT and consumer durable stocks continue to attract buying interest. Jewelry stocks are buzzing as soaring gold prices fuel a sharp rally. Titan jumps to a record high after the strong Q3 update, with gold coin sales nearly doubling in the last quarter. Senco Gold surges up to 12% on robust growth, while Kalyan Jewellers trades higher as well. Cipla shares tumble nearly 5% after US FDA flags observations on key partner Pharma. Then, regulatory action hits commercialization of tumor drug lanreotide in the US, weighing on investor sentiment. Markets await financial year 2026 GDP estimates. In less than an hour, the government will be releasing the FY26 GDP estimates. And according to the Informist poll, growth is now seen at 7.5% after a surge of 8% in H1. All eyes are on these numbers as they will also set the tone for Budget 2026. The government is likely to finalize the date for the budget. The finance minister will be announcing the budget 2026 date as well. Sources are telling us that a proposal to continue with February 1st has been seen, which now is falling on a Sunday, has been moved, and with the Cabinet Committee on Parliamentary Affairs is set to take the final call on the date of the budget. Let's straight away dive into the last half an hour of cues as far as the D Street is concerned. We remember have been slipping lower all through the session today, but we pulled up in the last half an hour, 1 hour odd, although still down by about 0.1%. 26,145 is the level at which the Nifty is trading at. The good part is that the bottom was seen buying into. Now, when we also see the sectors, you can see IT sector that's on the top of the sectoral performance today. Pharma stocks are also soaring higher. You also have the broader markets, mid and the small caps that are doing well right now. Even the metals, the media, the private banks, these are the sectors that are still hovering higher in trade. On the lower end, however, auto has drifted to the slow lane now. You can see oil and gas down, infrastructure down, real estate also slipping a tad bit lower in trade. On the Nifty, again, you have Titan that is continuing to hover near record high levels, about 4% higher. IT names like HCL Tech, Wipro, Tech Mahindra, Infosys, they are all up and about as well. And Jio Finance is also gaining in some traction. Let's actually welcome our guest on board now. Mr. Avinash Gorakshakar, the founder of Avinash Mentor Research, is now joining in on the program with us. Warm welcome to you, Avinash. Good to have you with us. Well, straight up, New Year greetings to you, and do help us understand right at the beginning of this year when we do see a lot of external shocks, geopolitical concerns, and the global narrative now again weighing on heavy on the domestic sentiments as far as D Street is concerned. What's the approach that you have on the markets, and what's the outlook?
Yeah, good afternoon, Sakshi. First of all, Sakshi, understand one thing, that now global, headwinds have turned a little negative, specifically as far as the FI outflows are concerned. But one good part today morning, which I've observed, is that the rupee has started to appreciate. This is a big positive for the Indian markets. And most importantly, I think in the next few weeks, you're going to see Q3 numbers getting rolled out, especially from the business updates which have come from companies, especially if you talk about gold jewelry companies like Titan, Kalyan Jewelers, Senco Gold. I think definitely it appears that the Q3 has been much better than what the street expected. The same goes for PSU banks, private sector banks, some engineering companies. So I think, net the numbers are going to be much better than what the street expects. So I think you're going to see a lot of stock specific activity now in the coming few weeks. On a broader level, I think this is what investors should watch out for, because the index may not move significantly either upside or on the downside. As long as we are above 26,000, I think there's nothing to worry. I think these kind of volatile moves will continue. But I think stock specifically, I think you're going to see a lot of action in the coming few weeks. And I think wherever we see very good numbers supported by good management commentaries, I think that is where, investors should focus on. And that's where I think the market will provide good opportunities for, investors to pick good quality stocks.
All right, so stock-specific action amidst the news flow around earnings will continue to garner some traction there. But Avinash ji, what continues to soar higher even in the new calendar year is the precious metals, gold and silver. I mean, look at silver. Within the first 7 days of the new calendar year, the silver prices have already soared another 15% on top of the near 180% rally that we saw in 2025. Similarly, these geopolitical tensions are again bringing the spotlight back onto these so-called safe haven assets like gold and silver. Yet again, what exactly would your approach be? Would you look at again the precious metals even after the kind of rally that they have shown, or would you stay comfortable with the equities at this point?
So actually, gold definitely looks more balanced and safer. I think silver has gone up significantly, and I think whenever there is a sporadic kind of rise, I think you should also realize that when the commodity value falls, it also falls with a very strong volatile force. So I think maybe some profit booking in silver could come in. But as far as gold is concerned, I think globally we are expecting that supply of gold is going to be curtailed by about 3 to 4%. There was a recent Bank of America report which mentioned that the supply side is going to be tight for 2026. And I think as far as the equity market is concerned, I think safely one can say that the gold finance companies, especially players like Muthoot Finance and Manappuram Finance, these are very strong bets in this given scenario, because they benefit significantly from the long-term value, and of course, business continues to be robust for them. So I think, probably clearly investors could take a chance if in a weak market they get stocks like Muthoot or Manappuram. That could be a welcome addition to their portfolios.
Fair point. Let's now shift focus, viewers, to a major concern. The question is, are digital lending apps illegally accessing your financial data? Well, the Delhi High Court has now sought a response from the Reserve Bank of India, asking it to clarify enforcement of digital lending directions 2025 and steps taken against violations by banks and NBFC-linked apps. And to understand more on this, I'm now joined by my colleague Anisha Mathur of India Today. Anisha, help us understand, this has been a major concern, and nowadays when everybody is moving to more digital, easy access to even loans, are digital companies, digital lending companies really accessing this data and misusing it?
Well, Sakshi, that is exactly the question that has been asked in this PIL that has been filed in the Delhi High Court. Now, let me take you through what the PIL says. The PIL says that in 2025, remember, the RBI had issued the digital lending guidelines. What this PIL is saying is that there have been multiple user complaints, media reports, regulatory advisories, as a matter of fact, concerning misuse of user data by fintech platforms. Now, they've identified some of these, which the more popular ones that our users, our audience will also know: Slice, Branch, Navi, Home Credit, Simple, Dhani, Zest Money, etc., which continue, and this is what the petition says, they continue to access borrowers' contact lists, call logs, collect phone usage data, and impose blanket usage conditions. And now remember, under the DPDP Act and other guidelines, taking all of that data of a user is now illegal. But the PIL is pointing out the fact that these apps continue to access this data. If you install an app on your phone and you're using it for any kind of borrowing, they ask for your access to your contacts, to your phone, to your photos. In fact, they ask for access to your entire phone. And that is why the court has now asked the RBI on what kind of guidelines have been issued to curb this entire situation, and what is actually being done, what kind of action has been taken with regard to the user complaints, etc. Now, this matter will now, of course, be heard after 6 weeks, but this PIL has raised certain very, very important questions when it comes to user safety and digital privacy. Back to you.
Absolutely. Thanks a lot, Anisha, for giving us all of those details. Let me go across back to Avinash ji and try and understand what really is happening here. Avinash ji, when it comes to the NBFCs, the banks, which have been so far the traditional partners for borrowing, we used to always think that our data is safe with them. But when these banks and when these NBFCs also to spread across to a wider audience, to expand their reach when it comes to borrowings and lendings, they also have partnerships with such apps which have now become very easy, user-friendly. For everyday borrowing of a few hundred, few thousand rupees, they have a limit, and then they go on to access so much of data of users. At the same time, there is no regulation which is keeping a check on that. How do you see an average investor, an average borrower out there? What are the risks that they are facing right now, and what should be the cautiousness that they should have?
No, I think, Sakshi, this is a kind of a occupational hazard. When you use any digital app, I think data is definitely something which cannot remain private. Definitely it is used for a variety of purposes. So I think, really the RBI or the ministry should ensure that, the user should decide whether his data can be used or not.
Yeah.
I think, if you use any data, there is not any problem. But as far as access or, approval of the customer is important. I think clearly NBFCs or fintechs or banks, all these agencies are using this data for a variety of purposes. So I think, we'll have to see whether the government imposes some strict regulations here. Because as of now, there are no regulations which can control the use of data. And frankly, customers don't know how their data is being used, because they are unlikely to know, in which way their data is being misused. So I think we'll have to wait and watch.
To wait and watch on that front, but definitely viewers, in case you are using any lending apps at this point in time, be very careful when you give out the permissions to those apps to access some of the borrowing that they give you access to, that what kind of permissions are you really giving in, and is that going to be a problem later on as well? That's something that you as a user also have to be very careful about as well. Let's come back to the markets and then try and understand what exactly should your focus be when it comes to investments. In 2026, Mr. Gorakh Shakar, what exactly do you think is going to be important for an average investor to keep in mind? The strategies that they should adopt, the SIPs that they are doing on a regular basis. Is there any form of a rejig that you believe they should be aware of and start doing at least?
No, I think, Sakshi, in 2026, you need to be very selective. I think gone are the days where easy money could be made. I think the same applies for even primary market IPOs. So I think, you need to be very selective. And I think first focus on the large caps. I think there are many companies which are available with fairly attractive valuations. I think in terms of sectors, we continue to be positive on sectors like automobiles, auto components, even agri, that is fertilizers and, agrochemicals, specialty chemicals, because these are sectors which have been beaten down. Hopefully there could be some respite. And of course, traditional sectors like railways and defense, you cannot ignore them, because the coming budget on 1st February is likely to, announce some further positive measures here. So I think Q3 will be a very standout quarter. Once you get to know the quarterly number, the commentary and the run rate, I think that will give a better sense to investors to plan their portfolio, because Q2 was just the beginning. Q3 is going to see the full impact of the GST cut. And I think, once that happens, we could see 14-15% earnings growth for the next year, that is FY27. So I think net, after the Q3, I think one can take a rejig and can definitely rebalance your portfolios according to the investor's risk appetite.
Fair point, viewers. There's breaking news now coming in on your screens there. Morgan Stanley has said that they expect a sharp turn in earnings growth over the coming months. Morgan Stanley also says that India's growth cycle is to improve on interest rate as well as the tax cuts that we have seen in the recent months. Morgan Stanley also has said that India's hawkish macro setup post-COVID is now unwinding as well. What they've also mentioned is that union budget could now contain the capital market reforms, and that's something that we should be focused on as well. I think this is an interesting one that everybody has to focus on. Avinash ji, do you believe after a slate of reforms on the taxation front that the government has undertaken in 2025, be it direct tax cuts by way of the previous budget that we saw, the indirect tax cuts that happened in the last week of September with GST rationalization, the income tax reforms as a whole, the act was also reformed in a way. And now Morgan Stanley, one of the biggest global brokerage houses, believes that they expect the upcoming budget to also entail any kind of changes to the capital market reforms that could come in there. What do you anticipate on that front? Do you think it is the need of the hour and should be on top of government's agenda?
No, it should be on the top of the government agenda, Sakshi. And I think if the government does these kind of measures, it could encourage, flows in the capital market, improve the market sentiment. In fact, we have been reading some news reports which are not authentic. But some news reports indicate that the government is mulling no long-term capital gains tax if the investor can hold on for at least 2 years. So, if this kind of, policy change happens, then I think you're going to see a lot of money coming to the capital market. Some form of, sentimental booster will be coming. So I think we'll have to wait and watch. But I'm quite sure the government will be making all-round measures after the GST cuts to ensure that the market sentiment will improve. And I think it will be a growth-oriented and a progressive budget. Of course, what comes to the capital markets is going to be a surprise. But if at all anything on the long-term capital gains tax does come in, which is like a booster shot, that would actually improve the market sentiment significantly.
Absolutely. So viewers, there is a lot of buzz on the D Street as to whether this time around the taxation reforms could be by way of giving some relief to the stock market investors in the upcoming budget. The LTCG tax, and could there be a rethink as far as the LTCG tax or the long-term capital gains tax that is, taxed to you as far as your capital gains are concerned from the stock market earnings. If that goes away, will that be a big booster shot, and will that really come in the budget is the big question now, and that's something that should definitely cheer the investors and stock markets at large if it really comes in. Let's actually focus on some of the other key stories that we are tracking now with respect to the pharma story as well. Cipla is in focus, viewers, and this is after the US FDA has flagged serious compliance issues at its partner, Greece-based pharma then. The regulator found lapses in contamination controls for tumor drug lanreotide. And our colleague Neetu Chandra Sharma now joins in with all those details. Neetu, Cipla's partner for lanreotide is facing US FDA observations at its Greece facility. How serious are these findings, and what could it mean for Cipla's US business for this drug?
Yes, actually, this is a potentially meaningful setback for Cipla, and the US FDA has issued a Form 483 with around 9 observations, including concerns about contamination risks, visible particles in drug products, poor aseptic conditions, and gaps in electronic data integrity. These are not cosmetic issues, but they go to the heart of the drug quality and manufacturing control. So lanreotide is a high-value oncology rare disease drug, and Cipla has already struggled with the supply since 2024. If the regulator escalates this into a warning letter or compliance action, the supplies from this facility could be disrupted further, directly impacting Cipla's US sales. And the market has already reacted with the stock down over 3%. Much now depends upon how quickly pharma then can address the FDA's concerns and whether Cipla has alternate supply options.
But Neetu, given that lanreotide is a complex injectable, how do these FDA observations really impact Cipla operationally and in its ability to maintain supplies in the US now?
So, Sakshi, yes, lanreotide is a complex injectable and requires very high manufacturing and quality. So, the Cipla has faced some supply constraints in the past because there are limited approved facilities for such products. So, regulatory observations at partner plants are not unusual, especially for complex injectables, and these are typically addressed through corrective actions. What matters now is that how quickly these issues are resolved so that the supplies in the US market continue without major disruption. So, for Cipla, the focus will now be on working closely with the partner and regulator to ensure continuity of this important therapy.
Thanks a lot, Neetu, for getting us all of that update. Definitely, this is negative news flow coming in by way of Cipla. The stock has also reacted negatively. Right now, it's down by about 4.3% odd. 1464 is the level at which Cipla is trading at. Avinash ji, coming to you, how would you read this news flow with regards to Cipla? Do you think this shall pass too soon, and one should not really pay too much of a negative concern on this one?
No, I think clearly this is an important drug for Cipla, and I think this flag by the US FDA is definitely going to be watched by the markets. Once the Q3 numbers are out. So I think we'll have to wait and watch. This is not going to be immediate solution issue. It will take some time.
Yeah.
But I think post Q3 we'll get to know what the management outlook and commentary is.
Okay. What about the overall pharma and the healthcare space? Do you think there is enough and more opportunity for investors to look at in the new 2026 calendar year in this space?
Yeah, I think, within the pharma and the hospital space, pharma, I think we continue to like Lupin. As I mentioned earlier, Lupin is a very well-established player, has a very strong exposure in the US and the rest of the world markets. And we expect a strong Q3 quarter. And within the hospital stocks, we like frontline players like Apollo Hospitals, then North India-based Yatharth Hospitals. Hospitals are going to be one area where possibly the budget is also going to give them a lot of significant tax benefits. And I think healthcare is an opportunity where India is still lacking, where a lot of basic necessary healthcare facility is not available. So I think to that extent, healthcare can be a good pocket where I think investors can, look at parking their funds even before the budget.
Okay, got that. So keep an eye out on the entire space. Let's actually look at some of the other buzzing spaces too. Talk about the IT space, that's the top winning sector today. What's your sense here, Avinash, right ahead of the next week, big earnings flows that will start in? What exactly is your expectation on the IT sector?
No, I think IT should do reasonably well. I think Q2 was a big surprise. We saw very strong numbers from companies like HCL Tech, Coforge. So I think we are quite positive on the large cap companies like Infosys, HCL Tech, typically even smaller companies like Persistent and KPIT. My sense is that once we get a clear signal as to when the US-India trade policy is signed off, a lot of US deals are there in the pipeline. So, maybe after the March quarter, things could get more clearer. But net, I think numbers should be much better than what the street expects, despite being the fact that December is a soft quarter. So we'll expect better numbers from most of the large cap IT companies.
Okay, good numbers floating in from a lot of large cap companies. Today, the index is up by nearly 2% at the day's high point. You can see strong volumes across the large caps and even the mid cap as well. You did see KPIT on your screens as well. Sharp returns can actually be seen on a single intraday move that these stocks are also showcasing right now. Apart from the IT space, the pharma space that we've discussed, within the defensives, how are you looking at the FMCG space as well? This has been a big laggard of a story in 2025. Do you think it will return in 2026?
No, I think it should return because we have been getting fairly good kind of ground level checks from our team that FMCG business is going to do significantly better because the rural market has now picked up, interest rates have come down, GST cuts have happened. So I think probably the first quarter where you could see some kind of green shoots for the FMCG sector is possibly the December quarter. Hopefully, I think 4 to 5% is the average kind of volume growth which we expect, with the large FMCG majors like say Marico or Dabur. I think most of these companies have come out with reasonably good business updates also. So I think you're going to see a much better FY27. Hopefully January to March will be also another good quarter, but I think the real impact of this consumption trend will be felt in the next financial year.
Fair point. All right. One more thing that I wanted to ask you is that in case you have to help our viewers, Avinash, to understand up until the budget, any key stock ideas that they should be betting big on?
So I think clearly, I would say that typically look at agri and fertilizer companies. It's a beaten down sector, but I think recent reports suggest that fertilizer companies will be getting some benefit. Even agrochemical companies could be getting some benefit because the government wants to push agri. So I think within this, I think, companies like Rallis, or for that reason, Sumitomo Chemicals from the agri space, and fertilizer stocks where we are positive are companies like Coromandel, Chambal Fertilizers, RCF. These are companies where definitely a good policy boost in the budget could definitely help them. So I think, you could definitely take a small contra bet and invest in a sector which is not very strong in limelight as of now. But in terms of the financials, in terms of the fundamentals, things can get better in FY27. Hopefully, if the budget presents a good opportunity.
Okay. Last 1 minute to go before the markets shut shop for the day. So let's wind down the markets and then we'll come back to Avinash yet again to take all your viewers' questions as well. So on your screens, viewers, 26,146. We're still down by about 32 odd points, about 1/10% lower. But the good part is that we pulled up from the day's lowest point, and that showed us that there is some buying that still is happening at the low points, in the trade as well. Let's look at the Nifty Bank as well. The banking index is also down in trade, but just slightly better off. In fact, 0.2% lower in trade right now, 59,974. So that 60,000 mark has also been breached on the lower end. Let's also look at the broader markets. They're in fact doing much better than the Nifty and the Nifty Bank today. Look at the mid-cap index, that's almost up by 0.4% and is nearing the day's high point as we close in on the session today. When we look at the small caps also, that's also up by about 0.3% odd, and you can see again a similar pattern as far as the mid caps are concerned and the small caps. They both pulled up in the latter half of the trading session today. IT sector, we've already pointed out, 2% higher nearly, and is the top sector in terms of performance today. Pharma comes in next, and apart from this, we also have maybe just about mid caps and small caps. Rest all of the sectors in fact have slipped into the trade. The top laggard today is the auto space. Look at the sharp drop that we've seen there. It's moved to the slow lane in trade as well. Oil and gas, real estate, infrastructure, these are some of the other sectors that have dragged. On the Nifty, Titan, HCL Technologies, Tech Mahindra, Infosys, these are some of the top winners as far as the gainers are concerned. Even Jio Finance, that's pulled up in trade today among the top winners. So there you have it on your screens, 1.5 to almost 4% kind of moves that we've seen in the top gainers list today. On the weakening end, where you do see some pressure coming in, of course, a lot of auto stocks is what you will find there. You'll also find Cipla, as we've marked out the story for you, Maruti Suzuki, IndusInd Bank. These are the top stocks that are lagging, and you do see some reason coming in there as well. Power Grid, Tata Steel and Asian Paints also dragging in trade. So that's as far as the closing action of the markets is concerned. Taking your questions next now, viewers. Aditya Chahal from Amritsar has asked the first question to Avinash. He's talking about the jewelry stocks, who he says are soaring, and he says I've made some good profits on the jewelry stocks as well, and wants to ask you, should I hold on or should I book my profits right now? He's right. I mean, look at Titan, look at Kalyan Jewelers, Senco Gold, Thangamile, all of them are up and about today. What's your sense here, Avinash?
No, I think clearly if he's made a decent amount of gain, I think some profit booking is definitely warranted, because, markets always reward, expectations first. And once the results come in, there is a bout of profit selling. So Q3 numbers are going to be pretty strong, whether it is Titan, Kalyan Jewelers or Senco Gold, at least looking at the business updates. So I would say that, at least book 20-25% of your profits, and the rest you could possibly evaluate after the Q3 numbers are out.
Fair point. Let's take the next question. Next one is coming in from Priya Shah from Vadodara. She says the IT stocks are back in action, and I want to know whether this is the right time to enter afresh into the IT stocks, or
there is uncertainty, and when there is a little bit of confusion, that is the best time to get into a sector. I think IT presents a good opportunity for somebody who's got a time frame of at least 12 to 15 months. So something like an Infosys, something like a Coforge, I think these are companies which can give decent returns, at least 14-15% returns, considering the fact that these are large caps. So I think, one can definitely take a, small kind of position here. But I think please be patient. Don't expect immediate rewards. You'll have to give at least 2 to 3 quarters to see some meaningful returns.
Okay, we also have another query, and that's coming in from Karan Dhar from Delhi, and he wants to know from you, Avinash ji, that should he be looking for opportunities in the budget-related stocks, or should he stick with commodities and metals? What would you advise him?
No, I think commodities and metals are now an overheated space, and I think you never know when a correction could come in, specifically, if you talk about silver or gold or copper. So I think this is now a space which has got overheated. I think you need to be careful here. I think for the budget, look at, the railway stocks, the defense companies. In railways, look at wagon companies like Titagar or Jupiter. electronic in the defense, you can look at Bharat Electronics or maybe an HCL. I think definitely these are stocks where some amount of benefit is definitely expected in the budget. So obviously you could ride the budget momentum, hopefully, if things come as per our expectations.
Absolutely. Avinash, it's always a pleasure to have you with us. So thank you so much yet again for sharing your views on the markets and of course for addressing all these queries of our viewers on India Today as well. Viewers, in case you too have any questions about your investments in mutual funds, SIPs, stocks or gold related queries, send them to us on the number that's flashing on your screens. And don't forget to tune in tomorrow morning at 9 a.m. for all the market opening action. I'll be back for that. But we are leaving you with the highlights from the CES, the Consumer Electronics Show 2026 that has kicked off in Las Vegas with futuristic technology on full display. But it was the humanoid robots that truly stole the show, from dancing machines to robots stocking shelves and assisting the healthcare. The floor felt straight out of a sci-fi movie. The Hero's secure phone grabbed the attention with de-Googled system and hardware-level privacy controls, while Samsung showcased its futuristic Galaxy Z trifold with the large folding display. With AI, automation and next-gen devices everywhere you looked, CES 2026 made one thing clear: the future is already here.